All right, we're gonna add in a short here. Zachary. I'm gonna do, yeah, and then stops to the high. Market shorting right now. I'm just market shorting. Yep. Yeah. And I just put my stop loss to that high, so that 944. 3. I did 3. And then if we invert the 5 minute, I will add 10 more. Yes. Yeah, it looks like it's probably gonna hit that. Good morning. Five minute. All right, not looking too bad. Hopefully we can invert this fair value up here. Good morning, everyone on stream. We just got in a trade. Let's see how this plays out. I'm gonna add 2 more to the short. Zachary, I just added 2 more to the short. I just did a market sell of 2 more. So if we invert on the 5 minute on that fair value, I'm gonna, okay. Yeah. All right. You have 3 in? Okay. All right. If you if anything, I'll wait for this inversion on the fair 5 minute, and then if we get that out and you still aren't working, I'll do it for you. Okay. I don't so just so you know, I don't have a TP on. There's no TP for me going right now. So I get this ready. Sell limit, I'm gonna do 10. So I'll be maxed out on my contracts here. Is it working, Zachary? Okay. 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 What's up, Slayer? Good morning. I haven't added the other 10 yet. Zachary, if you could trail stops a little bit. I've trailed the stops down. Do anything? Okay, okay. Once I get this trade here. No, no, it definitely didn't. It hasn't gone up at all. Oh, did it? Okay. All right. Once I get this trade in, I'll go over to your stuff and try to help you out. Stops. He's got stops. Oh, wow. Okay. Okay. I'll try to help you out. I think we're okay still so far. Just waiting for this inversion, hopefully. We're still good though. Let me see. I'm trying to do it for you right now. Look, I'm logging in. Yeah, you're still in a trade. Oh, you did a sell limit. Oh shoot. I'm gonna cancel that for you. No, no, you did a sell limit, not a market order. Huh. Let me see. Account summary. Yeah. I'm not gonna do it now because it actually looks like it might flip on us. I'll enter it if we invert this 5-minute for you. Okay. That'll be the best entry opportunity for you anyways. Got it. Yeah. Yeah, I might get stopped out on this trade, but we've took off. Might actually be inverting to the upside now, which would be great. Yeah, I just got stopped out. Now we're inverting to the upside. That was like a super small loss. I lost $36, so it's nothing crazy. If we invert this 5-minute, I'll be doing the bullish inversion. I don't know why he's saying that. He's saying he doesn't want to take a long run. I don't know why he's saying that, but we'll do 5. We'll do about half. We were winning Slayer, but ended up getting a very small loss. It was less than $40, so not too worried about that loss. But still waiting for. I was taking an early stab, listening to my mentor that I've been trading with. We took an early little stab, low risk, and now my model's about to play out. So I'm gonna take my model, and hopefully the model plays out pretty well. We failed to invert this short here on the model. That would have been ideal, and would have actually helped my short that I took move really nicely. Tried to invert it and then it failed, and now it's actually potentially inverting to the upside, so we're going to try to go long here. I'm still doing low risk, not super low risk. I'm taking about half my normal position, but we're going with trend, and yeah, like the trend is your friend. So I'm gonna go a little 8 contracts. Usually I do 15. And so we're going a little lighter, still a little bit more risk. We'd be risking about $500 to make about 800. So we'll see how this plays out. See if we even get the inversion or not. Powell speaks in 7 or speaks technically right now, but we'll see if we can. See. Where did we watch it? Watch it yesterday. It's on YouTube. Trying to get it for you guys real quick. It's the 25th. Let's say we were able to find it. Okay, it looks like we're gonna get a short opportunity, and we're gonna we invert this fair value gap. I'll be adding another short sell limit. I'll be doing 5 on this one on my short. No, I'm not gonna wait just because yesterday I waited and it actually wasn't as volatile as I thought. And I'm also I've been listening to my mentor, and he's not too concerned. So I try to listen to like what their discernment is and wisdom on it, and so I'm not too worried about it, especially after seeing price action from yesterday. TP. How much time do we got? A minute and a half. Okay. Yep. Looks like we're gonna get a good short here. Zachary, are you able to utilize your charts or no? No. Okay. I'll do it for you. Oh, you're good? Okay. We're about to get that inversion. Yep. I just put in my orders and I'm in. I only did 5. Sell off 3. Limit buy 3. Okay. All right, we're in the trade. BTC 10K, 108K. Let's go. Let's go. Yeah, our Bitcoin position is doing great right now. Hopefully we don't get another war thing going on. That'd be so annoying. Okay. Position is in on this. Let's see the 1 hour. All things are in a cross. Perfect. Stop loss is at these highs. Zachary, stops are at 955 high. At the 2, yep, at 2. Hopefully we can get a nice little runner today. Yeah, I'll be trailing it as it goes. I just haven't I have a partial TP at 2. We're taking off I'll take off 3 contracts and then let the 2 contracts run. Yeah. Okay. Let's go. Yeah, Bitcoin is ripping right now. I love it. Have a great trade going in there. Hope we can break these highs and get Bitcoin into some price discovery. The thing I'm not liking about this short is we're really failing to displace these lows here. If you look at the 1 minute, it'll hit these lows, support comes in. Hits these lows, support comes in. So I am kind of not loving that. Let's see if we can go and find that Powell there. Huh. Was it GDP? No, today's Powell again. Semi-annual monetary. Here we go. Sorry, live stream. We finally got it. Oh, is this yesterday's? What's going on? I hear it live.
But I think the last time we were all in this room, the most fascinating
Hey,
issues
yo,
that
live stream. I'm gonna
really the entire country faces are those dealing with auditing and accounting, and they are also the most important issues. So Sarbanes-Oxley was passed virtually unanimously. We need internal control. We need auditors to audit the internal control, and we need PCAOB to audit the auditors. And while this process may be expensive, you know what's more expensive? An Enron or a WorldCom or both pretty much at the same time. I think the losses to investors were, between the two of those, were well over $200 billion, but it's not just that. The loss of confidence in our capital markets cost this country even more than the $200 to $250 billion lost on those two stocks. I yield back.
I now recognize the chairman of the full committee, Mr. Hill, for 1 minute for an opening statement.
Well, thank you, Chair Wagner. Appreciate you holding this hearing. Today we examine the long-term regulatory impact of Sarbanes-Oxley Act of 2002. And while my colleagues may have been here voting for this bill, some of us were in the private sector living under it for the past 20 years, and I can tell you our perspectives are quite different, even though we share an important point of agreement, which is we want investors protected and we want managements and public companies held accountable, and we want high-quality audit standards. But all that is subject to now looking back 20 years, which is why I think Chair Wagner has done an excellent job in having this hearing. Implementation of the law, particularly under Section 404B, is something that's the most expensive feature in our public securities rulebook. Reports show these companies are spending over $1 million a year purely on SOX compliance. So the fact that we want to take a look at these issues and think through them, I commend the chairwoman, and I yield back the balance of my time.
Gentleman yields back. The chair now recognizes the ranking member of the full committee, Ms. Waters, for 1 minute for an opening statement.
Thank you very much, Chairwoman Wagner. I'm pleased that we are holding a hearing to commemorate the Sarbanes-Oxley Act. However, it would have been more meaningful if we could have had this hearing convened before, today. Let me just say that the Sarbanes-Oxley Act is the crown jewel of the Public Company Accounting Oversight Board. And I have to ask, Will, what you are doing with this legislation, would it enable, paying for a tax cut for billionaires? And perhaps I can remind you that if you had held this hearing beforehand, you would have realized that the PCAOB is the only regulator that has access to auditors and large public companies in China. And maybe we need to have you think more about realizing that shutting this regulator down doesn't just hurt U.S. investors, but it helps the Chinese Communist Party. Hopefully, my Republican colleagues are now paying attention. Thank you very much. I yield back.
Gentleman yields back. Today we welcome the testimony of Dr. Abigail Allen, Associate Professor of Accounting at the Marriott School of Business at Brigham Young University. And then Mr. Lawrence Cunningham, Director of the Weinberg Center for Corporate Governance at the University of Delaware. Mr. Frank Watanabe, President and CEO of Arcutis, and then Mr. John Coates, a Professor of Law and Economics and Deputy Dean of the Harvard Law School. We thank each of you for your taking the time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony, and without objection, your written statements will be made part of the record. Dr. Allen, you are now recognized for 5 minutes for your oral statements.
Thank you. Chairman Wagner, Vice Chairman Garbarino, Ranking Member Sherman, and members of the subcommittee, thank you for the opportunity to be here to testify. As mentioned, I'm an associate professor at Brigham Young University. I hold a CPA and also a doctorate in business administration. I'm here on behalf of myself, as well as my co-authors, Melissa Lewis-Western and Kristen Valentine, to testify about the findings from a recent research study that we conducted examining the costs and benefits of Sarbanes-Oxley, and in particular, Section 404, which deals with the audit of internal controls. We appreciate the subcommittee's interest in re-examining SOX in today's capital markets, as well as recent initiatives like the 2012 Jobs Act and recent SEC carve-outs, which acknowledge that the costs of SOX are not borne equally across all firms. A common thread across regulatory exemptions so far is a size-based litmus test which recognizes that the direct costs associated with compliance may be overly heavy for small issuers. Our research also speaks to the existence of indirect costs which manifest for firms of both small and large sizes. So our research focuses on a group of firms that we refer to as young life cycle stage firms. These are firms that can be large and high growth, but are early in their development as they explore strategic entry into new products or new markets. They invest heavily in R&D, are not yet profitable from a cash flow perspective, and play a critical role in driving economic growth through exploratory innovation. Our research suggests that SOX 404B had negative consequences for innovation for these firms. Specifically, we find that SOX negatively impacts both the quantity and quality of innovation produced by young life cycle stage firms. These firms spend less on R&D, produce fewer patents with lower citation counts. We also find that SOX has negative consequences for the type of research being conducted. Following SOX, young life cycle firms shift their research pursuits towards safer, less groundbreaking innovation. The patents that they produce are narrower in scope and less likely to lead to future technological advances. Why is that? Our research identifies two mechanisms through which SOX can harm innovation. The first is resource diversion. Young firms, like small firms, are cash constrained. Every dollar or hour spent on compliance is a dollar or hour not spent on innovation. This same logic, which applies to small firms, is the rationale that motivates current size-based exemptions. The second mechanism is called innovation hindrance. We believe that SOX imposes, well, we know SOX imposes centralized control structures, and we believe that sometimes those structures are at odds with the decentralized, flexible environments needed for exploratory innovation. This type of mismatch can stifle the type of risk-taking and creativity that drives breakthrough discoveries for young life cycle stage firms. Importantly, while we document these negative consequences for innovation, we are unable to detect any evidence that the costs are offset by the intended benefits of SOX for these young life cycle stage firms. While we do see improvements in financial reporting quality for mature firms, consistent with prior literature, we find no evidence that SOX improves financial reporting quality for this subset of young life cycle stage firms. No reductions in restatements, no improvements in accrual quality, no gains in future performance. Why? We theorize that these intended benefits do not materialize for young life cycle stage firms because their limited free cash flow and more concentrated ownership structures lessen the type of agency concerns that financial reporting oversight is intended to mitigate. Putting these findings together, a clear takeaway from our research is that the impacts of SOX on financial reporting quality and innovation is not uniform. Instead, it varies based on firm-specific characteristics that, in addition to size, may include factors like firm life cycle stage and strategic orientation. Accordingly, we advise that any policy solution must involve a complex consideration of both direct and indirect costs against the offsetting benefits by firm type. We also advise that the costs and benefits do not always manifest in the same time period. Like insurance, a regulatory approach that leans towards prevention will necessarily impose heavier costs today in exchange for some presumed security surrounding future financial reporting outcomes. By contrast, relaxing regulations alleviates current cost burdens while increasing future risk associated with remediation. Our results highlights that the goals of innovation and economic development are not always in contrast, but when they are, policy-based evidence is essential. Thank you for your time.
Thank you. Mr. Cunningham, you are now recognized for 5 minutes for your oral statement.
Chair Wagner, Ranking Member Sherman, committee members, thank you for the opportunity to testify today. It is an honor to be here. I'm Lawrence Cunningham, Director of the John L. Weinberg Center for Corporate Governance at the University of Delaware. I've been writing about Sarbanes-Oxley, SOX, since its inception and ever since, carving a niche in the legal academy at the intersection between law and accounting. SOX was an effective congressional response to several massive frauds. It restored investor confidence at a critical time and helped deter earnings manipulation. But over time, it became clear that SOX missed its mark in important ways, channeling excessive resources into internal controls at the expense of financial reporting. Let me stress this core insight. Compliance is not the same as accuracy. A company can have strong internal controls and still misreport its financials, or weak controls and report accurately. Yet SOX treats internal controls as equivalent to financial reporting, as if they are the goal rather than the means. Over 2 decades, SOX has fostered a sprawling compliance industry where controls proliferate and auditability of controls becomes more important than utility. The system often prizes procedural auditing checklists over substantive accounting judgments. That's why, despite SOX, financial restatements persist, including recently at marquee companies like CSX, Archer Daniels Midland, and Macy's. Last year saw the most reissued financials in many years. And over the past decade, internal control reports flagged fewer than a quarter of the issues in advance. They have become post-mortems, not early warnings. The costs are real. SOX imposes fixed costs that hit small firms the hardest. The average is $1.5 million per year, with a quarter of companies paying more than $2 million. For small firms, from biotech companies to regional banks, that's money not invested in R&D, employee hiring, training, growth, and other important business matters. And the impact on capital markets is pretty clear, too. SOX contributed to a sharp drop in the number of public companies, from 6,500 or so back then to around 4,000 today, even as the number of large private companies has grown dramatically. Nordstrom and Walgreens are just two of the companies recently indicating they prefer to be private than public, underscoring the costs. Investor perspectives are divided. Many investors believe that the external audit of internal controls adds little or no value. That's especially true of the long-term focused investors who prefer to do their own analysis. On the other hand, some support the audit of internal control, especially the index fund community that doesn't conduct firm-specific analysis. But that division underscores the need for flexibility in this area. Congress has modernized every other major securities law. SOX deserves the same reassessment and reform. The reform should focus on three things. First, to reinforce the primacy of financial statement reporting over internal control. Second, focus audit standards on judgment and substance, not process and systems. And third, tailor compliance to risk. Let's reaffirm that the North Star of our capital markets is accurate financial reporting, not well-documented internal controls. The two pending bills are a good step in that direction. Thank you. I look forward to your questions.
Mr. Watanabe, you are now recognized for 5 minutes for your oral statement.
Chair Wagner, Ranking Member Sherman, and distinguished members of the subcommittee, thank you for the opportunity to testify today. My name is Frank Watanabe, and I am the president and CEO of Arcutis Biotherapeutics, a public biopharmaceutical company based in California. I'm also the vice chairman of BIO, which represents over 1,200 growth stage biotechs that are driving the search for the next generation of breakthrough medicines. Arcutis is a young biotechnology company that develops innovative treatments for serious skin diseases like psoriasis and eczema. We were founded in 2016 and went public in January of 20. We received our first FDA approval in July of 22, have since received FDA approval for 2 additional treatments, and we continue to invest in our portfolio of innovative drug candidates. Since inception, we have invested about $1.4 billion in developing our products and have grown from 3 employees to 350, with operations in all 50 states and employees in 39. But we have yet to turn a profit, let alone recoup our massive investments in R&D. I'd like to share some of the challenges that Arcutis faces due to Section 404B of the Sarbanes-Oxley Act. While I fully support regulation, it needs to be smart regulation that accounts for a company's size and the cost of compliance. I believe it is unreasonable and wasteful to impose the same compliance requirements on a 350-person biotech with revenues below $200 million as those for an 80,000-person company with $60 billion in revenues, as the law currently requires. We first experienced the overwhelming burden of 404B in 2021 when, although we had not generated any sales and we had just gone public the prior year, we became subject to 404B when our market cap exceeded $700 million. 2 years later, we rolled off of 404B when our public float dipped below $700 million, but we couldn't scale back our costly compliance systems, knowing that we would likely need to meet the requirements again, which happened in 2024 when our public float again exceeded the 404B thresholds. To date, we have spent around $11 million on compliance with 404B. And those are costs that are rising inexorably. For example, last year alone, our auditor fees were increased by 24%. Our switch to 404B roughly doubled our auditor fees, and as a small firm, we had to bring in outside control and compliance resources that cost us about $500,000 a year. The money we spend on unnecessary compliance is money that we don't have to invest in developing life-altering drugs. I understand the reason for enhanced controls required by SOX. I'm old enough to remember those abuses. We all remember, I think, the egregious business abuses that led to the passage of this legislation. But the current thresholds for 404B are too low, and Congress and the SEC should take steps to adjust those thresholds. We're grateful to Congress and the SEC for their previous efforts to reduce the burdens of 404B on small businesses, but there is still more work to be done. Congress can take common sense steps to reduce the burden of 404B on small companies, for example, by adjusting the public float and revenue thresholds as you are considering. It might also amend the 2020 exemption so that companies are exempt if they qualify as SRCs or report revenues of less than $250 million. These changes would reflect the fact that many companies are still small businesses despite having high market capitalizations. Another smart reform might be to use soft triggers for the public float threshold, measuring float over an averaging period of, say, 12 months rather than a single point in time, as is now. I also applaud the proposal that implements a 3-year rolling average threshold for revenue instead of a 1-year snapshot. Congress should also consider revising the definitions of accelerated and large accelerated filers to better account for low revenue companies with high valuations. And you might consider establishing a new intermediate tier of filers, helping to ensure that low revenue innovators like Arcutis are not subject to the same burdensome compliance requirements as mature, highly profitable multinational corporations. Revising the timelines for emerging company growth status, for instance, by extending EGC from 5 to 10 years post-IPO and raising the public float threshold, would better account for the long development timelines typical in the biotech sector and offer immense relief to smaller companies. While it's not the major focus of the hearing today, I also want to applaud you for your recent hearings on institutional proxy advisory firms. We have suffered struggles with them, and I think it's high time that Congress reform that sector. Congress has a critical opportunity to support American innovation and competitiveness by modernizing 404B. Small companies like Arcutis are critical to U.S. biotech and the U.S. economy, but we can't thrive if precious capital is consumed by regulatory requirements of little practical benefit. Thank you again for inviting me today, and I look forward to the committee's questions.
Thank you. Mr. Coates, you are now recognized for 5 minutes for your oral statement.
Chair Wagner, Ranking Member Sherman, Ranking Member Waters, Chair Hill, thank you. Members for the opportunity to speak here. The last time I testified before you was during COVID, so I didn't get to be in this nice room. Good to be here in person. I'm going to quickly go through a few themes that I think will provide some counterpoints to what you've heard so far. First, SOX, I just want to make sure everybody's got this right, is a disclosure law. It doesn't actually require a company to do anything differently than its management believes is correct for controls. It can report publicly that it disagrees with its auditor as to some of those judgments, and many companies do. And so, Frank, you might want to talk to your lawyers if they're telling you you have to follow the auditor's directions about your controls, even when you think the costs outweigh the benefits. You don't have to. Okay? The disclosure elements of this law make it a less costly law than some of the alternatives. Other countries in some places actually directly specify the kinds of controls companies have. We don't in this country. We rely on companies in the first instance, and then disclosure so that investors whose money is being risked with the control systems in question can judge for themselves how and when to price their investments in those companies. The benefits of the law are clear. Professor Allen's study, which I commend as a very good study, and she said this in passing, but I just want to make sure everybody heard it, shows that most companies subject to 404B benefit. Their financial quality is better as a result, and even in the period that she was studying, the costs did not outweigh the benefits. Now, something that was not mentioned so far is that PCAOB softened 404B in 2007, using its discretion under the law to do so. And I would think the kinds of issues that have been raised where the 404B may not be translated properly for a given company could be addressed by the PCAOB or the SEC. I will note that under Republican administration, nothing happened. Two terms ago. The PCAOB could have, at that point, made more modifications. They could have said, for an early stage company with 300 employees, we don't need the auditors to do quite the testing that they do for Goldman Sachs. The PCAOB was not, under Republican leadership, willing to take up that challenge. You can ask the members who ran it back then why. It could be done today. The SEC is now under Republican administration and could take up this challenge directly. The kinds of things that I heard Frank suggesting earlier, they're perfectly appropriate things, I think, for the SEC to consider, but I'm not sure that a federal statute is the right vehicle for doing the kind of fine-tuning that goes to average versus point in time, et cetera, because in fact, we're probably not going to know in advance what the right calibration is, and it's the kind of thing you would want the agency to be able to fine-tune over time. If you block it into a statute, we all know in this room how hard it is to pass statutes. It's likely to get outdated fairly quickly. I'll note SOX does not do that. SOX delegates to the PCAOB and the SEC authority to make changes in how auditors go about their work. And so that could be done under current authority. A few other things. Many companies choose, even though not required, to comply with 404B today. There are many private companies who have voluntarily done this. There are many companies that float bonds when they could float leveraged loans and be able to get out of 404B, but they choose not to. That suggests that the debate over this issue is not nearly as clear-cut as it sometimes is presented. Other countries have followed the US. Most countries now have the equivalent of SOX. So it's not the case that the US is some outlier in this respect. Last thing I would say about the proposals is that you really need to think hard about the risk that a statutory change will open the door again to the kinds of bad reporting that went on leading up to the passage of SOX. Chair Hill's family's bank, when it was bought by a public company, was bought by a public company bank subject to SOX. They paid about $500,000 for total audit, including 404B in the year of that deal. I believe the stock that was paid as part of the consideration of that deal was more accurately priced and reliable as a result of Sarbanes-Oxley, and that the deal might have been a little bit more fraught if there had been the kind of accounting that went on in the 90s present at the time of that deal. Thank you. I'll stop there.
We'll now turn to member questions, and I recognize myself for 5 minutes for questioning. Mr. Watanabe. Experts have argued that the benefits of requiring an external audit testing to internal controls under Section 404B are outweighed by the annual costs for early stage or biotech companies, which can amount to over $800,000. In your case, you cited much higher. Can you discuss your experience in running Arcutis Biotherapeutics, a small public biotech firm, and whether the funds spent on Section 404B compliance had to be reallocated from, let's say, R&D and product development and other things?
Yeah, thank you for the question. Chairwoman. Yes, it has been a significant expense for our company. Our audit fees alone last year were $2.2 million. We still are in the middle of this year. I would estimate we'll probably be in the range of 2.5 plus this year just for our audit fees. In addition to, as I mentioned, I think before, we're spending about $500,000 a year for support for our compliance program to meet the standards that are imposed on us by our auditors. And that is money that has to come out of R&D. That's the variable cost in a biotech company like ours. And so we're not investing that money in developing the next generation of cures. I would also say that our audit fees about doubled when we went from 404A to 404B, just given the complexity of the audit that the auditors required.
Thank you. Dr. Allen, according to your research, young life cycle firms experience a significant decline in innovation after becoming subject to SOX. Your findings estimated declines between 9 and 12% in R&D intensity and 6% decline in patent filings for young life cycle firms relative to pre-SOX levels. In addition to the decline in the level of innovative activities, your research also found that post-SOX young life cycle firms pursued less valuable patents. I found that interesting. Can you discuss how SOX implementation forces young life cycle firms to alter their innovation process?
Certainly. So I would say that the idea here is that in addition to diverting direct resources, spending on research and development or time spent on research and development, the centralized control, formalization of processes, and reduced flexibility that often accompanies the implementation of internal controls can be at odds or mismatched with the decentralized, flexible, risk-taking environments in which exploratory innovation thrive. So I'll just put a sub-point. There are two types of innovation: exploratory innovation, which is strategically oriented towards new markets, new products, has a high probability of failure, and exploitative innovation, which actually takes incremental steps using existing processes and knowledge. While exploitative innovation, conducted by more mature firms, might actually benefit from more centralized controls processes, the exploratory innovation that young life cycle stage firms are engaging in is often mismatched with the control environment imposed by SOX, and that's where we think the difference comes from.
Thank you. Ms. Cunningham, despite the costs and disruptions to innovation processes due to SOX compliance, research suggests that young firms don't experience compensating benefits, such as substantial improvements in financial reporting quality, to offset these challenges. Can you discuss how the incremental improvement in quality achieved through SOX compliance might not be as significant for smaller issuers compared to complex multinational corporations?
Yes, it's very important to appreciate that when an auditor conducts an audit of the financial statements, it's required to test the internal controls and assess the control environment. So that's an activity that's part of the regular financial audit. And for relatively simple firms, low revenue firms, early stage firms, that's sufficient. And you're not going to get a big bang, a big incremental gain if you then say the auditor also has to give a certification and attestation, a full audit of the entire control environment.
Thank you. Mr. Cunningham, many companies cite SOX as a factor in their decision to go or remain private, including in the recent cases of Nordstrom, Staples, Twitter, now X, and Walgreens. If large established companies with robust resources find SOX compliance burdensome enough to consider privatization, this begs the question, how are smaller public companies supposed to cope? I am out of time. I will let you respond in writing if that's all right.
Yes, fine.
Next, the chair will recognize the gentleman from Georgia, Mr. Scott, for 5 minutes for questioning.
Thank you very much. 22 years ago, when I first was appointed on this committee, I served with one Barney Frank and worked closely with Barney on this bill. And I want to point out at the outset that my Republican friends, if they gut this agency, my Republican friends are unilaterally disarming the United States against China and cutting our regulators' access to audit firms, exposing working families and investors to greater risk. This is so seriously, and I urge my Republicans, don't destroy this wonderful mechanism, this bill that gives the American public protection against China. Mr. Code said foreign-based auditors can operate with no oversight. Won't this create an unfair competitive advantage for companies using those firms?
Yes, sir, it would, and it would return us to the period before this body passed the bill that led the PCAOB to negotiate the memoranda with the People's Republic of China, during which China companies defrauded U.S. investors with a greater propensity and severity than they're doing today. I'll note, too, some have suggested the SEC could take over that role that the PCAOB has provided. Those memoranda are with the PCAOB. The People's Republic of China would get to walk away from them if the attempt was made to transfer inspection authority to the SEC instead.
Yeah, and can you speak a little more about this uneven playing field and the potential for distorting capital allocation and market confidence?
You raise a very excellent point that's not come up yet. The principal driver, I think, for SOX was fraud, but the biggest benefit it has provided is to improve the allocation of capital to firms like Mr. Watanabe's. The precision with which you can price stock depends on the reliability of the financial statements, which include the reliability of controls. One quick word on controls. Controls are kind of basic. Most companies have them, just to be clear. I'm quite sure that your company had controls before it even ran into SOX. There may be layers of cost added onto them, but to not have any requirement that anyone check whether the controls are adequately designed for China-based companies will tilt the playing field in a way that means that some of the capital that appropriately should be allocated to U.S. companies will be misallocated, I believe, to China companies.
Yeah, now let me make this point, and I think you touched upon it, but it's very important. Private enforcement through securities litigation relies on public disclosures and audit reliability. So if regulators cannot inspect or investigate audits, won't investors have fewer tools to pursue legal remedies for fraud or misleading statements?
I believe you're absolutely right about that, too. It was said earlier that restatements have continued, and that's true. Many companies still make mistakes today. But the incidence of fraudulent misstatements have not risen anywhere close to the levels that they were at before Sarbanes-Oxley. And that's partly because the private litigation and the inspections together are a more powerful deterrent to fraud.
Now, I want my good Republican friends to understand this major point. If investors believe that Chinese or foreign companies are exempt from scrutiny, this will erode trust in our financial statements of all U.S. listed companies with foreign operations or auditors. This is significant. Thank you.
Gentleman yields back. The chair now recognizes the gentleman from Arkansas, Mr. Hill, the chair of our full Financial Services Committee, for 5 minutes for questioning.
Thanks, Chair Wagner. Let me thank the panel for great testimony. I appreciate it very much. I want Mr. Cunningham to start with you and maybe reflect on Professor Coates' comment that somehow this is all optional, that if a company wants to do it, they can do it, but a company doesn't have to do it. Could you start out by just giving us your view on that comment? I thought it was a thoughtful comment. I want to make sure we're clear on the record about that.
Yes, thank you very much. Professor Coates' assertion is that Sarbanes-Oxley is all about disclosure. It only requires disclosure. It doesn't require any substantive activity. At a high level of theory, there's some truth to that, but there are some
All right, stream. I'm gonna hop back on with you guys. Done watching that testimony. I thought we could watch like the first 45 minutes to an hour. Market was looking pretty bearish. Was looking good for us. It seems to be respecting this 1 hour fair value gap. We got stopped out there on our position. Now we're hoping to see that price inverts this other 5 minute fair value gap here. But I'd be super bummed if now it decides to displace the downside. Before we, yeah, yeah. Hopefully the 1 minute doesn't just shoot down now. That'd be a real big bummer. But watching this fair value gap above us, no, no, not for me. I just kind of like, I only take these when like my mentor is kind of on and he's kind of talking about it. Let me see. I think he hopped off. Yeah. Yeah. No one. Yeah. He's done for the day. Yeah. I don't know. I wouldn't take that personally, because I see that for me, the only next thing is this fair value gap above us. The way price has respected this 1 hour fair value gap. I guess the only way I would is if we see the 1 hour invert that, I'd be open to taking that short. But right now it looks like the 1 hour is respecting that fair value gap below us and wants to go higher. What do you mean? I don't think so. I mean, it could. It's got 10 minutes left on this 1 hour. If it does invert, I'd be open to doing another short if it does in the next 10 minutes. But I think we're more likely to invert the 5 minute to the upside at this point, because these 5 minutes failed to displace these lows. The 1 minute, yeah, the 1 minute failed to kind of displace the lows once it hit there. It's going back down, but yeah, I would kind of want to see what it does kind of on the higher time frame first. Yeah, but the 1 hour inverts, we can definitely do an entry on the 1 hour and then put our stops based on the 1 minute highs to keep it tight. So we're not totally out if the short does decide to play out. Yeah. But it looks like it's finding support at that 1 hour on the 5. Yeah. Yep. It's consolidating right now between these fair value gaps. Oh my gosh. Dude, Trump is a bully to Powell. It's like, I guess Trump just said during Drone's testimony, not there, but like outside of it, he's like, Drone's just a stupid person. Donald Trump hates Powell. There we go. 1 minute is inverting some fair value gaps. Let's see the 1 minute here. See it, 1 minute again. Found support in that 1 minute fair value gap and the 1 hour fair value gap. The 1 minute might be inverting here. Some of these fair value gaps. We'll see what it does. Six minutes, so 2 more 5 minute candles, then we get that hour close. We'll see how this hour closes. So this next 5 minute candle will tell us where the hour closes, and that'll give us a lot of information on whether we want to go short or get potentially set up for a short, or if we're probably looking for a long opportunity here. But we're down $192 for the day, I think is like the number. Let's see. Yeah, this one says 248 on this one. Still, even though we have taken a loss this morning for the week, we are green. So hopefully this week or today we can get maybe one more good trade in, get that day green, and then close out another green day. So hoping that today we can catch, one more good trade, and then call it a day after that. Oh, let me turn on some music for the stream real fast. Hey, yo, sorry. Forgot that the music wasn't on. Okay, looks like the hours finding that support on the fair value gap. 1 minute, let's see the 1 minute. 1 minute looks like it's inverting some of these fair value gaps to upside. That's not an entry signal for me, but it's good confluence to say what is the lower time frames doing? Are they showing some bullish signals? I think this 1 minute, this 1 minute just inverted this fair value gap. Can we get some displacement candles to upside? And then my entry signal will be, does the 5 minute invert this fair value gap here? That's what we're waiting for next. So, okay, 3.5 minutes left on this hour. Let's see how this closes out. Kind of bummed on that short. That short just missed our TP. Like, we were super close to hitting our TP. Kind of bummed we didn't tap that. It was, it's always bummer when like price gets really close, then decides to kind of do a little bit of reversal. All right, let's see. 3 minutes left on this 5 minute. see what it does here. It looks like, based on the previous 5-minute candle, it's just coming down to these lows and holding these lows again and this 1 hour fair value gap. So if we could get a nice, you know, maybe displacement candle to the upside, if we get a fair value gap in that candle, then we have a unicorn setup. We got this little manipulation to the downside. If we get a displacement with a fair value gap, you got this breaker block, boom, unicorn. Good confluence with our, that'd be a good confluence with our bullish bias potentially on this if we respect this 1 hour fair value gap. 1 minute, let's see the 1 minute real fast. Did the 1 minute maybe get any unicorn setups? I don't think so. I mean, do you have this potential breaker block with a fair value gap that price has been respecting here? But I'd really like the 5 minutes, maybe give us one. That'd be good. There we go. I'm liking this candle. Looks like it's pushing up, which should mean the 1 hour closed right around this range here. Honestly, you know, with this long, you know, it's price discovery. If we break above this high, you know, we're in price discovery when it comes to the NQ. So, you know, this trade could run. You know, we don't know where resistance will come in. Maybe if you have an order book or something that you can look, maybe there's some orders up here at some point. I don't have that. I don't look at that kind of stuff, but yeah, if we can invert this, break this high and displace above the high here, there's no telling, you know, how high could this run today? Could this go up to $23,000 today? Could this go to 22.7, 22.6? You know, where will this stop today? So kind of fun when you can go long and you're in price discovery, because it's like, how high will it go? I don't know, you know? So we'll see how it plays out. We'll definitely have our TPs if we invert, you know, our 2.5 standard deviation. We'll definitely be paying attention to where that is. Take a partial TP, and then hopefully we can hold a runner, you know. What is going on here? Okay. All right, so the 1 hour closed, and the 1 hour looks like it's respecting that fair value gap. You know, we'll see how this next, I wouldn't be surprised if this next 1 hour decides to come down and test that fair value gap and then push. Because typically if you get a one tap, you usually will get like one little tap and then it goes. So we'll see what happens. The 1 minute, we didn't really get any displacement candles to the upside here. There's not even a fair value gap. No, there's not even a fair value gap. So I'd want to see us displace the 1, 2 candles or fair value gaps up above us. We'll see. The thing that I like today, though, is that we at least got trades a little bit earlier. Lately, our trades, we haven't gotten a single trade opportunity until 10 a.m., you know, 9:30 a.m. So we're literally like staring at the charts for like 4 hours until we even get a trade opportunity. So I am thankful that today we did get a little bit more trade opportunities a little earlier. I'm just bummed they didn't play out. All right, now that we have a fresh hour, right? This is the first 5 minutes of a brand new 1 hour candle. It looks like it's tapping that fair value gap, and let's see what it does. My guess is probably going to respect this fair value gap and hopefully give us some displacement to the upside. See how Bitcoin's looking too. I did open an Ethereum position today also. I liked what Ethereum was showing. Bitcoin's looking good. Where's Bitcoin kind of sitting at right now? 107.4. I would love to see Bitcoin break above like this high to the left and these highs to the left for good confirmation for our position. But I like what I'm seeing on Bitcoin. Ethereum, I knew I entered early and that potentially price could come test this fair value gap here before it decides to run up, but I like that on the day time frame here on Ethereum inverted this fair value gap, which let me put my inverted this fair value gap here on the day time frame, so targeting these highs. But Ethereum, if the Ethereum decides to catch up to everything else, like, man, Ethereum could really run, right? Ethereum hasn't even retested all-time highs. This is some highs to the left, but there's all-time highs. It doesn't show here on the BLOFIN chart, but there's all-time highs up here at like over 4K, right? So, oh wait, is this it? 41. Oh yeah, okay, these are the all-time highs. So we haven't seen Ethereum test these highs yet at all. So I'm very much looking forward to, I'm pretty sure there's highs higher than this. I'm pretty sure. This is, when is this, 2024? Yeah, there's highs higher than this. So this is not all-time highs. But yeah, Ethereum hasn't even tested, breaking through and testing all-time highs. So I think 5 minute just gave us a fair value gap potentially. Ooh, that would be awesome. If we can get a fair value gap here in this 1 hour fair value gap and then invert that, I'd be pretty happy with that there. Let's see the 1 minute. Yeah, 1 minute seems to be holding these lows here. We'll see if it displaces below. That's a bummer. Oh man, that's such a bummer. Now it decides to run down. Oh yeah, it looks like it's gonna run down on these lows. Yeah, our TP would have hit. Let's see. Where's our inversion? It's on this candle, I'm pretty sure. Yeah, TP is about to hit on that. Dang it. Oh. I probably shouldn't have listened to him on my stop losses and just kept them where I normally keep them until TP hits. But, oh well. Yeah, normally I would keep my stop loss at the high until we hit, that. But I was trying to listen to him and because he's technically, but oh well. Yeah. But nice thing is we did get a fair value up here. So looks like we are getting a fair value up. So we're going to get some, I think some long opportunities here soon. If we can start inverting some of these fair value gaps. It did hit it, I'm pretty sure. Yeah, like barely, like pixel perfect. Yeah, like literally hit it on the dot. Dang. Oh well. Okay. That sucks. Oh well. Oh well. At least it wasn't like a big loss. That would have sucked if it was like a big loss. Oh, do they? Oh, dude. Love Cinnabon. There's a Cinnabon like right by my house now. No. It'd be bad if I did. Oh my god. Yeah, it's literally like a block away. Dang, man, that sucks. That's so frustrating. Yeah, it would have worked if I would have just stuck to mine. Ugh. That's why literally sometimes I hate being on their calls and listening to it, because like it does, yeah. And like if I would have just stuck to my own plan, it would have smacked. Yeah. Ugh. Yep. This is when trading's frustrating. Ow. Yeah, like an $800 loss today. Yeah, that would have sucked. Yeah. Yeah. Okay. Oh. Let's see. Oh, dang. He re-entered into a short, too, when he was off the live. He just shared his screen. He's up like... Yeah. Dang it. That it's super annoying. Oh my gosh. Yeah. 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 Oh well. I think what I'll watch now is like, what does this hour candle do? Does the hour invert this short? Because if we can catch an hour on the inversion, like if this hour candle inverts that for value gap, we can enter on that hour candle and potentially write this down pretty low. We'd be a little late to the trade. I don't even know if I would want to really take that short. Dang. Trying not to get super frustrated. So freaking annoying. This thing now on the 5-minute looks like it actually might run to the downside. Yeah, it looks like it might hit London lows or Asia lows, which would. No, I'm not gonna do that because now you're chasing. So like his entries at that No. Oh yeah. Yeah, no, it looks like it's about to do exactly what I thought it was gonna do. Yeah, I'm not gonna enter another one because now you're chasing and it could turn on you at any moment. So, oh well. At least we're still green for the week. That's what I'm so happy for. Copper, hey, you're like break even probably right now for the week. What? Oh yeah. What I'll be really excited for is that tomorrow Powell won't be talking, and we'll have a normal day hopefully. Because tomorrow before market opens, oh my gosh, dude, freaking copper. Tomorrow we have GDP and unemployment before market opens, and Powell spoke. So I think tomorrow should be like a pretty normal day. Get trades hopefully early in the morning and then just be done. Yeah. So like once I get in a trade, I just maintain it from my phone. Yeah. But usually on a normal day, like on a normal trading day, like you remember, I'd be done by 7 or 7:30. Like if I can get a normal just trading day, get his quick trade in and let it do. Yeah. And it's 8:15. Because even that early short we took would have worked too. All of them would have smacked, yeah. I don't know why he does. Yeah, I think he would rather take a lot of little losses to finally get the winner and then let it run. Because he's taking like, just like us, like really small losses. So the winner that he'll get that day for taking those little jabs are way bigger than any of the losses he'll ever take. Yeah, so if it does decide to all of a sudden flip on him really crazy and go displace to the other direction, he's ready to just go in and enter. gonna see what's how big is this position? I think next time if I listen to him and he's being super aggressive on his stop losses, I'm just gonna stick to my normal way of doing my stop losses. Yeah. Yeah, it would have worked today, so I think that's what I'll do. Like, still listen to him, do what he's doing, but then just not be so aggressive. Yeah. Yep. Yeah, you don't want it to be a red trade. Yeah, yep. Yeah. Yeah, I agree. Okay. Oh wait, I only have 4 left. 1, 2, 3, 4. Yep. Perfect. Okay. I'm liking that price is kind of failing to displace here, and I'm hoping we can finally get an inversion soon. Yeah, looks like we might be getting it. And which would be like every day this week. It goes down and then literally gives us that entry to the upside, and then both of them the dubs. Yeah, it's looking good. Looks like we might be getting this inversion here. I'd be super grateful for. Okay. Like the 1 hour tapped into this order block down here. Get that inversion. Come on. Get that inversion. Let's target this high up here. That'd be sick. I think if we go an inversion, I'm gonna go 10 units on this trade. I'm gonna go like kind of semi-normal risk, a little bit lighter, and then if we invert the second one, add another 5. If we can get a trade today that could make over $1,000, that'd be great. I haven't had, typically my wins on my accounts are on a day would be around $1,000, and we haven't had that in a while just because the market's been so terrible. So I would love to get back to like my normal wins kind of schedule. And R. Might take a little while. We might have to wait again quite some time until we actually get another trade opportunity today. Might not be until like 10 a.m. or something. The next one to come. Looks like price is kind of moving down a little bit lower. Oh yeah, there it goes. It starts displacing. Oh my gosh. That is, oh my gosh, that is so frustrating. That is so frustrating. That is so frustrating. Freaking listen to him. Oh my gosh. I've almost regretted listening to them every single time. I don't think there's actually been one time I've actually won by listening to them. I don't think I'm. My model has worked better every time, but if I just stick to my model. So frustrating. Oh my gosh. Because this one's got this like. What? Yeah, I could. Yep, yeah. I still think we're gonna get another trade opportunity. It's just bummed that I'm just so pissed that I freaking went against my own knowledge. Ugh. Yeah, it would have been amazing. We made like probably $600 on this, at least. That would have been nice for the. I mean, it's not a huge win. Like still, like it's not a huge win, but it's still a little decent profit. Honestly, at this point, I kind of hope it goes down to London lows, and then reverses. That'd be sick. That'd be a really good move. Yeah, we could have trailed stops now here. Already taken half TP. Stops are now here. Oh my gosh. For everyone watching, that's just sometimes how it goes, right? Like literally our stop loss is like pixel of it tapping us out. Like it's sometimes the market just likes to do it to you. I don't think we were stupid for moving our stop loss, right? Like I don't think it was like a dumb idea to move stops. Is it frustrating? Yes. Were we stupid? No, I don't think it was a stupid move. It's more just frustrating, if anything. Like that's all it is. I don't think we made a wrong decision. I just think it's a bummer. Come on, leave us a little fair value gap here. Leave us something before you run up. Nasdaq 2 just tapped into the 200 EMA, and look how it's responding to the 200 EMA. Kind of does that every time if you look at it. Actually hasn't tested it in a little bit. Look at this. Last time it tapped into 200 EMA, look what price did. Ran up. And then didn't test and hasn't retested the 200 EMA until this morning. So I'm kind of liking this. I'm liking the reaction off the 200 EMA. Looks like price is bouncing off of that. And looks like we're heading to that fair value gap up top here. We have not even tested this fair value gap yet. It tried here, didn't even get to it. So hopefully we get here, invert this sucker. We can attack external range liquidity, and then hopefully get into price discovery and let it run a little bit. Because if you look at like historically, right, this day, price did have a good move to the downside, right? And we actually caught this move, right? We caught this move here. Price had a great move to the downside. But what's the move that lasted the longest and ran? The move to the upside, because it's with the trend, right? So our upside moves tend to be the ones that give us that better move to the and a longer runner that locks us in bigger profits. So hopefully we can get that inversion up here and then get a little bit of a runner until market close. That's what I'm kind of hoping here as price finds its point of where it might reverse. Stops would go down at that low that was just formed if it does come up here reverse. Partial TP probably be near this high, wherever the, like say if this is what the inversion looked like, partial TP would be like right in this fair value gap up here. That would be actually kind of cool if we can get partial TP before this fair value gap. And then if we invert this fair value gap, we can add again to our position to then take another partial TP up here. So you're kind of just rinsing and repeating, double down on your profits. Oh, shoot. I guess Fed Chair Powell inside the meeting said that if future trade deals may allow the Federal Reserve to cut interest rates. So Powell's saying, you know, the hot word, the interest rate cuts in some of these, in the testimony this morning. So that could help us with our bullish narrative that could come soon. We'll see. I'm not like gonna force anything. If we can get this win today, let's see. If we're targeting right around here, yeah, if this trade does end up playing out and our target's right around this fair value gap, we'd make about $1,000 today, which would be great because that puts us way in the green on our prop firm evaluations. Not way in the green. It puts us about $1,300 in the green, $1,500 in the green on my evals, and then it puts our week in the green from last week too. So right now we're in the green. We've almost erased all the losses from last week. We have this trade. If this next trade does play out and we make around $1,000 on this trade, we're definitely in the green, even from last week's losses, which were very small. I think we were down like $600 from last week. So this week have already made almost 500. So we're down like $200-ish from last week. So if we can make this trade, it'll erase the losses from last week and then put us in a nice amount of green in our prop firm evals. That'd be really, really nice because I really want to get these evals done. I have 45 accounts right now in evals, and I'm trying to get them all passed so that I can start, you know, growing those accounts, getting payouts from those accounts. So yeah, it'd be huge if I can get these out of the eval stage. We just haven't had any good trades. Like not a single trade has ran. When I passed my first account and got the eval done and now it's funded and like I'm just trying to grow the profit in that account. That was in May. In May, almost every winner was around $1,000 to $1,300, but I had a couple runners who made me over $4,000 per trade. So we have not had that one time since May in these last couple months. We haven't had any really good runners that I've been able to catch yet. But now that the market and the war stuff is over, I'm hoping we can get back to that normal rhythm where we can catch those runners that typically happen, where you kind of catch the move of the day. But yeah, this just has been very unusual trading conditions lately. But $4,000 across 45 accounts, that's crazy. I don't even know what that is. I don't even want to do that math, but that's a lot of money. If I can get like my normal profits, that's, yeah. Even $1,000 across that's a lot of money in one day to be making. But I think something I've learned over the last couple months in my trading is less of looking at how much can I potentially make and more looking at how much am I potentially losing on every trade. Because if you want to be a successful trader, your whole goal is how do you have capital preservation rather than the potential or the what if of like what I could make. Your ultimate goal is to stay in the trading game. How do you stay in the trading game is you don't lose money when you shouldn't be, right? Or like there are going to be times where you're going to risk, but the whole point of this game is how do I stay in the game as long as possible without blowing accounts, without losing money? If you're trading with your own funds, how do I not lose my account, right? By blowing the entire thing. And so if you want to be successful, the most successful, what I've learned is you got to focus in on what's your risk that you're willing to lose to make whatever it is. Focus in on what you're willing to lose on that trade and be okay with, yeah, I can risk losing $600 on this trade right now. It won't destroy my day. It won't destroy my accounts. Now, if $600 for you and your accounts are way too much, figure out what that number is and don't go above it, right? Don't go way above. Some people's numbers are way higher than, like me, I'm risking $600. My mentor who I was listening to, his light risk day, his like really low risk day, he's risking like $2,000 to $1,000 in a trade. That's a low risk day for him. So everybody has different risks, right? Maybe yours is $100, maybe it's $50, maybe it's $200, whatever it is. You want to stay in this game, you want to be able to trade for longer, like stick in the game for longer, figure out what your risk is, figure out what you can handle, and don't break those rules. And be willing to identify how the market conditions will tell you if you should go heavier or lighter on risk. Like if the market is if the market's consolidating, all right, today we're going to go lower on risk. We're going to take a fifth of our risk. We're going to take a third of our risk. If the market is in a trend, all right, let's up the risk. It's more likely if we're going with trend, the right trend is our friend, so on and so forth. That's just a little quick tip for you in the live stream who are maybe you're finding yourself, maybe you took this trade this morning and you actually lost $1,000 instead of like me, I only lost $200. And if I lost $1,000 today, yeah, that would ruin my day and put my accounts not in a great position. But I knew I shouldn't be risking that much on this trade. So yeah, just wanted to share that with you guys. So some of my learning lessons over these last year and a half. And like my goal during this last month where the market has been absolutely terrible, like the market was garbage. We had some of my first red weeks on these accounts, which I haven't had a red week on one of my prop firm accounts in like 6 or 7 weeks. We had, a little bit more red days. And so my whole goal in this last month, I knew the market was terrible. We had the war stuff. The market was in consolidation. We weren't in a clear trend. So my whole goal was, hey, can I trade, still make money and grow my accounts, but not lose any, right? How can I preserve that? How do I not blow an account so I don't have to pay for another reset and then have to start all over again? And the thing that I'm really proud of for myself is like, in the past, I would have blown an account and I would have had to start over because I wasn't being smart. But this last month of a terrible market, I didn't blow a single account. Did I go in the red? Yes. But I didn't get close enough to my maximum loss limit that I almost blew an account or anything like that. I think I was around like $1,000 away on some of them. But because I was taking lighter risk, I didn't get close enough. And now I'm actually in, I think most of the accounts are in profit. And maybe some of them are like, because I started some of them during the war stuff. I think some of them are like maybe down $200. But they're all pretty much at break even or even in profit. So I'm really proud of myself for this time. This is my first time actually doing well in a crappy market that I didn't blow an account, I didn't lose an account, and I'm actually still in the game, right? And that's what you want to be. You want to be able to stay in the game even when the game's terrible. And now today, because I know the market is trending, because I know we're in a very bullish state in the market, I know that if I get this bullish inversion, because it's alongside the trend, I can up my risk a little bit. I'm not going full position. I'm not going full risk, which is my normal 15. I'm going 10. Why am I going down not my full risk? Is because the hour is kind of showing signs of bearish momentum. And so for the 5 minute, we can at least target, I know, some of these higher points. If we do get our model, we might not, run up crazy today, but I'm going to go a little lighter, not my full, but still be able to hopefully make a solid trade and get a good dub in without ruining my accounts. Because even if this trade, like say this trade ends up coming up here and we actually getting our entry signal, I'd be risking probably more close to a full R, and I might lower some of my contracts. I might go down to like 8. I wouldn't want to risk more than like $1,000 on this trade. And $1,000 is kind of close to my full R risk. Like a thousand, like $1,500 is like my full R risk. So if I took a full R risk, I'm losing like $1,500 is maybe $2,000. And so this trade would probably be more closer to like taking half. My goal would be to, on this one, to do like half our risk. So maybe risking like $700 to $800 on this trade. So right now I'm planning on taking 10, but I think I might have to go down to like 8 is my goal. Just because the higher time frame's kind of looking a little bit more bearish than bullish. Yeah, I'm gonna actually go down to 8 because if I enter, say I enter in this fair value gap, that's probably right where my entry would be around. Yeah, I'd be risking $850 at the very, very low of my risk. And most likely if we get this inversion, I'll be able to move stops up as it goes, and take off risk as it goes. So I'd be comfortable doing around 8 on this. Because if I did 10, what is 10? 10 is probably like, 10's like $1,000 exactly. And because I'm right around break even on my accounts, I'd rather go a little lower than higher today. So I'll do 8. And then if I am able to move stops up as it goes, I would risk like 600, then maybe 400 to 300, right? And then we're potentially like say 2.5 is up here. We're making like $600 to $700, which would put us in the green for the day. So I'm totally fine risking that. All right, I'm gonna go to the restroom real fast, step away from the computer real quick, just because it's like I've been here for 3 hours. So I'm gonna step away from the computer. It won't be long. Maybe get a refresh on my coffee, get some water, and then we'll come back and hopefully maybe, you know, these candles have finally done something for us. All right, still nothing. Yeah, it's still waiting on it. Might take a little while. What up? Waiting for this thing to finally do what we need it to do. Oh. Yeah, it should come by then. It's in 2 hours and 30 minutes. That's like 11. So we definitely should get it by then. If it does. I hate it when people do that. It's like, okay, you didn't answer the question. Yeah, I wish you could see these order lines better. How do I do that? Maybe if I changed. That does not help at all. Oh. All right, come on. Cute, give us something. All right, chat. Looks like we're about to get maybe a fair value up here. We got 2 minutes left. Looks like, oh, man, I spoke too soon. It's still there, but we might lose it. Hopefully it keeps this fair value. If we can get this fair value, oh, dang it. It just took it. Dang it, dude. I was really hoping we could get that fair value up because that'd be a really tight, from stop loss to entry, super tight. I can do max position size, but now it just took it away. So it looks like we won't be getting that, which is sick. No, it's not. Yeah. Dang it. I was really hoping it'd stay. Oh well. Let's see. 1 minute. It's kind of looking. That you can kind of see the orders better. It's so hard to see those guys. Dude, yeah, that trade would let's see. Yeah. Yeah, we would have hit 2.5 on that short so far if it doesn't go lower, but I'm just gonna kind of chill and wait to see when we get this inversion. I think it's gonna come eventually, but it's almost usually when we hit around 10 a.m. we get that kind of the flip on the market open, and then we kind of go the other way. So we're at 9:15. Hoping in the next 15 to 30 minutes we get that next opportunity. Oh man, price just consolidating now. Looking good though. Now these things a push. It failed to displace that low. The 5 minute. Alright. No fair value gaps over there on the 5 minute, so we literally just have to wait until it inverts that one away above us. Okay. Okay. We might get a trade soon, but we'll see. Alright, okay. Sounds good. Alright, sounds good. Alright, bye. Alright, chat. Looks like it's just me and you left. I'm the last one in this call for my kind of team I trade with. And we're gonna see. We might get a trade up here. We might not. It might just continue kind of down for the rest of the day. Bond that one trade that we took got stopped out. It happens, you know, our day is red, but for the week we still are green, so I'm not like, it sucks, but whatever. You can't let those little losses get to you, because you let yourself get on that tilt or whatever, it's just gonna ruin the rest of your week for you. So I try to just not let it get to me. It is very frustrating, and like, but it's gonna happen. Like, this isn't gonna be the first time, and it's not gonna be the last time it happens, you know. So we take it, we don't let it get into our heads, don't let us get us all frazzled for no reason, and then we just execute when the next one comes. Or if not, if we don't get one today, guess what, there's always tomorrow, and there's gonna be the next day and the next day and the next day. So like, we're gonna get trade opportunities, so this isn't gonna be like the last one we ever get. And that's also important to remember, because like, we're in this for the long run, not just for like a week or a month. We're in this for the next years of trading. So I'm just updating a lot of my accounts on my TradeZella for my trade journaling, because for some reason all the syncs got jacked up and it won't update my trades and tell me like what I've made this month. So I'm updating that right now. I want to kind of see what I'm at this month. I think I'm kind of break even. I might be a little green this month, but I think it might actually be just like break even. All right, it says it's all synced. It says it's all synced. Let's see. So for this month, we're up 7K so far. Not too bad. We're up 7K so far this month. across all of our accounts. That's not even all of them. That's only 20 of my accounts. So I have 45. So actually we're probably up a little bit more than that. But yeah, this month is actually green, even though it was a terrible month. We're actually up. So not too bad. Not up a lot, because like 7K, but across 20 accounts, it's really only like $300 an account. So we still got a long ways to go in order to get our accounts passed and get through the evals. But it'll come. Patience is profit, like we say all the time. So I'm not too worried about it. I'm not gonna get too caught up in that. But yeah, I'm just excited. I can't wait to get all these funded and you know passed on to the next stage in it. But this last month has just been tough. Hasn't been a great you know, trading month. Let's see how Bitcoin's doing right now. Bitcoin is doing excellent. I still love my position on Bitcoin. It's killing it. I'm really happy with it. Ethereum, let's see how Ethereum's looking. Ethereum was a little red, but honestly, I was kind of expecting it. I would not be surprised if, you know, we come down and tap into this fair value up here on Ethereum and then run up. Let's see, XRP was one I was kind of looking for to maybe enter. XRP looks very similar to Ethereum, but the thing with XRP, there's no fair value gaps to invert. So I kind of want to see if XRP comes down to this fair value gap and how it reacts to this day fair value gap that it created, and then see if I can catch a trade there. Let's look at Solana. Solana also, just like XRP, hasn't inverted any fair value gaps here on the day time frame. So I kind of want to see it test this fair value gap down here. Does it invert it or does it respect it? And I would love to get in a Solana position too, because Solana can go all the way up to these highs again. And test those all-time highs. So I still think there's a big crypto bull run coming this year. It's just been a much different year than any of the other cycles have ever been. So I'm still convinced that the bull run isn't over for crypto and even like other assets like Nasdaq and things like that. So and that the fact that the Nasdaq's showing strength now into price discovery, that'll flow into, you know, assets like cryptocurrency and other things like that, where they will start showing strength too. So I wouldn't be surprised if soon we see Bitcoin back to all-time highs, back to retesting it just like it was over here. And I would not be surprised if we start seeing that very soon, within maybe by the end of the week. We could see the expansion coming, you know, between now and Friday. Oh, we've been streaming about 3 hours. Honestly, in the next 20 minutes, if I don't see real progress up to this high, I might end stream, so I'm not just sitting here. But I will be still trying to trade, but I don't know if I'm going to be streaming much longer, because I would like to maybe go get ready for my day a little bit more. Yeah, I'll be able to call it. So I'm just bummed that this first trade. The thing though with this first trade, we would have been done for the day. We would have just been managing it right now. Stops would have been at this high and just kind of like managing it as it goes down. But I love it when I can do one and done and just be done for the day. Like that's the best feeling. Because that's really ultimately why I'm getting this trading. So I can just be one and done. I don't just sit at the screens for hours. Some days you just got to sit and be patient. see what the 1 minute's looking at. 1 minute's looking like it's very much starting to consolidate, right? So like you have these highs and lows really tight now on the 1 minute time frame. It's not looking at more like structure like here, right? You got this push up, push down, push up, push down. Now it's just kind of consolidating. So are the people who try to short the market about to get squeezed if we decide to push up? And will we maybe see some displacement to the upside before market closes? Or are we going to see consolidation and then a continuation throughout the rest of the day to maybe London and Asia lows? So just kind of watching now and seeing if we do get that long opportunity. But I'm not going to be taking any more shorts for the day. Shorts are out of the picture. That's not anything I'm looking for. Unless we get some kind of push up, creating fair value gaps, and then my model presents itself to short, then I would be open to it. But if the model does not present, which as of right now, it's not presenting it at all, I will not be shorting. There is the potential for my model to play out to the upside right now, and that's the only what I'm looking for. Unless I finally get, you know, my model to the downside presenting itself again. But the only time that happened was this morning up here. And yeah, it played out beautifully. It was a great trade. We just happened to get stopped out. Sucks. Looks like we're seeing a continuation. It looks like price is breaking lower, and even heading to London lows. And we might get, maybe by the time we get to London lows or Asia lows, we might see then a presentation of our model even lower. But right now, looks like we're not getting anything anytime soon. So I'm probably going to call it for the live stream. Guys, I want to thank you guys so much for joining me in. I hope you guys enjoyed this morning. I hope you're able to get some wisdom out of it. I enjoyed it. It sucks that the trade today didn't play out. Would have been a dub. Would have been a banger trade. But we put stops a little too tight and didn't get our entry signal again. So a little bit of bummer there. It's going to happen. Let's not let it get in our head. We still got 2 more days of trading this week. I will not be live streaming tomorrow. I'll actually be in a tournament with my brother. His company's having a golf tournament tomorrow, and he invited me to go golf. So I'm gonna try to wake up real early, head out to LA where the golfing tournament's at, get into like a coffee shop or something at market open, hopefully catch a trade before the tournament starts at 8 a.m. Which for me, market opens at 6:30 a.m. So I'm hoping within that hour and a half I can maybe catch a trade, and then while we're golfing, just kind of manage that trade. But I'm not going to force anything. If I can get something in that first hour, I can get something. If not, hey, we didn't get it tomorrow. So tomorrow I won't be trading. Friday, again, I know my brother's in town, so I'm going to be doing some things with him. Probably won't be streaming again on Friday, but still we'll be trying to catch some trades in the morning. If I can stream, I will let you guys know via the Discord, and I'll let you know there. But tomorrow for sure will not be streaming because I'll be out at the tournament. But I'll see you guys potentially Friday. If not, I'll see you guys around. Thank you so much for hanging out. Again, look out. I'm actively trying to get these prop firms to give me some affiliate links so I can hook up my audience with discount codes for the prop firms I'm using. Waiting to hear back from them. They're super slow. The prop firms are very slow in the way they get back to their support and stuff. So it's kind of frustrating because I've been trying to do it for almost 2 weeks now and just haven't even heard anything back. I'll probably follow up with them again today, see if I can get anything. But I'm trying to get you guys some discount codes so you guys can then do some prop firms, get like 80% off some of these prop firms fees per month, and get you guys set up, especially now that the market's back to really solid. So yeah, I'm excited. And also, again, 501 mil, we're still doing that, and we're in a live trade with Bitcoin and Ethereum. It looks like those things are going to play out pretty nicely unless we get some kind of black swan event like we did with Iran, like stopped us out on the position. But you know, we can't predict those things. We can only, like I said earlier in the stream, we can only preserve our capital, and that's what we do here. And that's what I was able to do. I preserved my capital in this trade so I didn't lose too much. All right, everyone, I will see you in the next live stream. Join our Discord if you would like to take part and know the next time I go live. And if there's